Hi guys, I hope all of you are doing well. This is your Nifty Guy. Welcome to today's episode of Decoding Nifty with me. This is the series where we analyze and decode Nifty on multiple time frames so that we are well prepared and have a plan to trade the following day with much more clarity and confidence. Now, today's video will be important because I'll explain two concepts of RSI that I had also discussed in the RSI video that was there. If anybody has not watched that particular video yet, please go and watch that particular video. You will learn a lot about how to use RSI in the most simplest way, as well as maybe you'll get a fresh new perspective about how to simplify trading using RSI. Now, today's price action was something wherein I had used RSI uh, twice, and that is the reason where I will be showcasing how RSI can be used to exit a current position that you are there in, and also in identifying fresh new reversal entries. So, in case if you guys like the way I put out daily Nifty plans along with price action concepts, please do not forget to like the video, subscribe to the channel, share it with your trading friends and community, as well as put down anything that you might have to say in the comments box. On that note, let's start with today's video. We'll first be discussing what we had planned for today versus what happened in the markets. What trades did we take? How did we trail? Where did we take our book our profits, or where did we take a SL? Everything. We'll discuss everything in detail. And then in the second part, we'll jump towards planning the trade plan for tomorrow. So for today, what we had planned was that Nifty was in a sideways kind of consolidation, and we were looking for a long entry above this particular high, a short entry below this particular uh, low, which was also a 2-day low, right? Uh, Nifty had a very good opening. Nifty opened with a gap up, and say, for example, if Nifty would have sustained above this particular high, and then after a pullback, we could have gotten a very good long trade. This is what I was preparing for once I saw the opening in Nifty also breaching this particular level momentarily when the high was made. See, try to understand this is a good level of resistance, 25,600, wherein market took a fall one, two, three, and maybe the fourth time it would break. As you know, resistance which is being tested multiple times eventually becomes weak and then gets broken. And that was the reason I was looking for a long entry here. But obviously, see, our system, my system that I am teaching you guys, my setup, which is there to safeguard you in case of any misadventure. So we do not enter directly. We would have waited for Nifty to give us a closing above this. Then after a pullback only, once the high would have been taken out, we would have entered into the long trades. And as you can see, Nifty had other plans. Now Nifty came all the way till around here, wherein I extended this particular trend line that I spoke about yesterday, wanting to see how Nifty behaves around it. But Nifty eventually also broke down below it. Did I enter into a trade around here? No. As I said that I will wait for proper confirmation and only then will I be trading. Now, post this particular fall, Nifty consolidated into this wedge kind of a pattern around which again there was not a single trade punched in by me. Once Nifty broke down of it, gave this pullback. Again, below this, I did not take any entry because this was not quite a convincing uh, breakdown for this particular structure, not a valid pullback also. At least one swing low should have been taken out, which was this particular swing low. So this particular fall which came down and this was the pullback. I entered around this candle when this low was taken out. And as you can see, we got a very good fall and move on the downside. And as I had discussed, I had entered this particular position only in very, very small quantities of what I would have, what I usually trade. And market was generous enough here, giving a good move on the downside. A small pullback came. Initial SL was around here, but since there was no more further swings which were there, I was trailing it candle by candle. So once this big red candle formed, I moved my SL to around this particular high. Once this candle formed, I moved the SL around here. Once this candle formed, I moved this around here. Then market gave us a swing, and then again formed a new low. Now, as I told you guys, in case if you are in a short position and you see a positive divergence on the charts, it is a sign for you to get out. And as you can see, this was the RSI positive divergence. If you can see, market formed a new low, but RSI formed a new high. And that was my trigger to get out, but I still waited because market was looking kind of weak it had come down to retest this particular trend line. I will come down to it when we once we discuss the plan for tomorrow. But I got out around this candle high. Once this candle had formed and gave us a closing around the highs around here, that is when I got out of this particular position. Now, the second trade which I took was on the long side. After market created a new high, market went back below this particular low, creating a new low. And while the market created a new low again, if you can see, RSI again created a very new high. And this for me was a trap setup wherein at the break of the day's bottom, market had invited fresh new sellers, and once market will be moving back up, all these people who would have shorted the markets around here would their stop losses would have been triggered, and that is the reason why after this particular candle close with a good inside candle, which is considered as a pullback, I decided to go long above this particular high. The right entry, or the most, I will not say the right entry, there's nothing right or wrong in the world of trading, but the most uh, maybe the noobish entry, wherein if you want to wait for entire confirmation, not a very defensive entry, would have been above this particular high. Again, if you would have entered here also, you would have got a good move around here. But I entered a bit aggressive because of the trap strategy that I was discussing with you guys. Once a swing breaks down and it immediately reverses, there are some people who are trapped. And in that case, there is a good move on the opposite side, which we can witness in the market. And this is exactly why I also waited for some form of pullback, which was this particular red small candle. And once this high was taken out, I entered longs here. This long position did not give me a lot of points in terms of the option premium. The reason was the falling wicks around this particular time. And while the spot, you can see, moved a good amount, the option premium did not move by a lot. And I was trading in next week's expiry, which is the 10th of July Nifty weekly expiry options, but still they even did not give me a good move. But nonetheless, trade when it forms on your setup, it is worth taking it. It is worth taking that particular risk. On the spot chart, it gave 1:1, but on the options chart, it did not give 1:1. But nonetheless, I was trailing it tightly and I booked out. Because why was I trailing that particular position tightly when I yesterday said that when we are going long, we will be looking at going in full quantities, and we might even look at holding. This was my statement yesterday. Now, you might have a thought, why was I trailing it tightly and why did I book it out before 1:1? Well, the reason was I would have taken a long entry very, very strongly and with much more conviction if we would have started and moved up directly. But the theme for the day or the tone for the day was clearly bearish, and this was the reversal trade that we were taking, and that was the reason why I was quick to book my profits around here. And in case if I would not have, even though market did not even come out near the breakout levels, the option prices did hit the entry price as well as went down below it. This was my observation. That is simply because of the falling wicks, and that is something which will be there, and you guys need to take care of it. Right. So these were the two trades, and as I said, RSI played a key importance. First, in getting me out of the short trade that I was already in, and secondly, in planning a long trade. Uh, on a day like this particular, wherein the tonality of the day is on the short side, right? So I hope I have been able to explain the two set trades that I took very clearly. And in case, once again, a gentle reminder, in case anybody of you would not have watched the particular video on RSI, please go. It's already live on the channel. I am 100% sure it's going to add value to your trading. Right now, for tomorrow, what we can see is no new fresh high has been made in on a bigger time frame. This was just a breach high, and this was not used for the Fibonacci as well. So these levels will remain intact. I will be deleting these levels. I'll be quickly using Fibonacci from today's top till today's bottom to see where exactly are we. Till what point have we retraced? Now we have already retraced around the 0.382 levels. And this particular swing will hold a lot of importance because a big round of selling had come in from here. I will be marking this particular swing high, which is also in between the zero point 0.5 to 0.618 zone. Or we can, again, I'll be planning it safe. We'll be marking this entire zone. And we will be planning for a long entry only above this, right? In case of any negative price action around this, we can plan a trade on the short side. Say, for example, market opens flat, comes around here, is not able to break this particular zone, takes some resistance around here, forms a double top or forms a base, and then breaks down below the consolidation area. We can take a short position. Above this, again, if market opens with a gap up, even if market opens flat, goes up above this, gives us a pullback, only then we'll think of a long entry. In case of any gap down and anything else, will be a short entry, short trade around this. I will quickly be showing you the Nifty chart on the daily time frame. So we had actually broken out of this particular uh, parallel channel consolidation that we were in, and I had extended this particular trend line because this might be a retest of this particular trend line. It is not necessary that we'll go to the zero point 0.5 to 0.618 zone. So this is what I do is I plan out and I play out multiple scenarios in my head. And in case if this is just a retest and then we are planning to go up again, so this is the reason why we have planned for long entries. But in case if we are going further down to retest these levels as well, we I have already prepared a plan for trading on the short side as well, right? Again, any short entries around here, we need to be cautious, and around this zone again, we can look for some uh, price action formation for entries on the long side, some reversal patterns. And as I already said, below this, we are already short whenever this comes, not necessary tomorrow, maybe day after, if at all, right? So we need to follow the price. What I am trying to tell you guys is we are ready for all the scenarios. Now, it is for the market to decide what plays out in the market tomorrow. We are prepared for everything and we will be acting accordingly. So I hope the trade plan for tomorrow is clear, along with some key price action principles that we just covered in today's video. Uh, in case if you guys like the video, please do not forget to like, subscribe, and comment on the video. That will be really helpful. And on that note, I will be taking your leave today. This is your Nifty Guy signing off for today. I will see you guys again tomorrow post the markets. And again, tomorrow is the weekly expiry of Nifty. Anybody trading Nifty options is into option buying just like me, please switch over to the 10th of July expiry Nifty options. Do not trade in tomorrow's expiry options over a long period of time. You will be thanking me for the same, even though you might be paying slightly more premiums for your entries or for your positions. It is in your best interest to shift to the next week's expiry. Uh, and that is simply because of a very simple thing, which is known as theta decay. I hope traders who are trading options are aware of theta decay. And this is a one way in which you can guard or safeguard your position against high theta decay by switching over to the next week's option expiry. And that is something which I do from expiry minus 1 day, which is today also. I trade the two trades that I took were in the 10th of July expiry and not the 3rd of July expiry. So I hope you would pay heed to it, and this will help you improve your trading further. So that's it for today. I'll see you guys again tomorrow. Cheers and thanks for watching.